What's up guys, RB here with Compound Trading Group. Today I want to bring you a video on market structure. Today we will go over change a character and break a structure and how to apply it in trading. Hope you enjoy. Alright guys, before we take it to the chart, I want to do just some simple overview drawings and market structure. So what we'll do is we'll grab the path tool and we'll just create a simple structure. So as you see here, we have a low, we have a higher high, or a high at this point, then we have a break. Makes this a higher low, and we have a high, higher high. So we'll mark these to make them clear so we can see these. We have a high here, we have a higher low, and right here we have a low. All right, so as you can see right here, we have an uptrend. We have higher highs being put in, higher lows being put in. And then what we want to see is the market to continue up, come down, put in a low. And so now, we have a higher high. And we have a higher low. The reason I did not draw this break yet is I wanted to make a point before I draw this structure continuing. As you're drawing market structure, you have a high and you have this break of structure. So as we know right here, this is what we call a break of structure. So we'll label this BOS. And then we have a high put in, a pullback, and a double top, right? So we have not broken this high structure yet. And the important reason that I didn't draw that is because a lot of people want to go ahead and draw in this higher low right here. But that's a big mistake in market structure. And the reason I say that is because until this structure here breaks, our range of trading is from this higher low right here. Let's go ahead and make this bold. And this higher high right here. And so until this level right here breaks, this is what we call a ranged market, right? This was an uptrend, and now we're into a ranged market. So if the market does this, comes down here, bounces on a double bottom, and we can see the market do this. And this is what happens a lot, right? It did it today on SPY. So it's very important to know range. Before I move on, I wanted to draw that because a lot of people get caught, and this is a common mistake I see, is a lot of people will go ahead and draw in this higher low right here, and they'll draw that higher low, and then you'll get a change of character right here. You see this change of character? And I say this is a big mistake because trades can work out this way. As you see, we were in an uptrend, a change of character. You would expect a pull back to make a lower high, right? And then a downtrend happen. And sometimes these trades work out, but sometimes these trades go against you and you stop out. The reason this is very important to know, this is not a change of character because this structure right here was never truly made. And our higher low from down here to higher high right here is our trading structure. And at that point, being in a range, I would like to draw out, my Fibonacci's and grab that 0.5 spot and know that this is my fair market value, my FMV. And so I like to know where fair market value is. I talk about this a lot in the Compound Trading Group. This value right here, this middle ground, is where price is deemed balanced. You have sellers and buyers that are usually in agreement in this price, and you'll see it become resistance and support a lot. And in this price zone, you get a lot of chop action. And so I teach in the Compound Trading Group that when we are in a ranged market, you want to buy puts on top and calls on bottom. And the reason for that is this is deemed cheaper value in the trading range we're at. Calls are at the cheapest value down here and puts are at a premium. And then puts are at a cheaper price up here and calls are at a premium. And so, while trading range, if a trade does go against you and you're in a call up here, it's going to move against you very fast. And you're going to lose a lot of money faster than if you were in a put that went against you right here. A put that goes against you here is going to move a little bit slower because you're buying it at a cheaper cost. So as I just wanted to make that point clear before we moved on, that this is a common mistake I see a lot. Also in our traders in the compound trading group, I see this mistake a lot, that we get antsy in drawing market structures, and we will go ahead and pre-draw that, but then we get a change of character, and you can get caught up pretty quick and get in bad situation pretty fast that way. So as in market structure, what we'd like to see happen is that high to be made here, come down, go make a high, and then from there, what we'd want to see is, pull back and a continuation. And so as soon as that high is broke, this high was broke. So now we have a high here, a higher high. My bad, that's a higher low. We have a higher low there. And then we come in and we put in a higher high. And then that is broken and we make a higher low. So as we did with the last time, here is your break of structure. And right here is your break of structure. The best thing you can think about break of structure is trend continuation. So as we are breaking structures, our trend will continuation, and as we know, this is an uptrend. So we have our trend line that we can trade off of. And that's an uptrend. And so you got higher highs, higher lows, higher highs, higher lows. These higher lows are being put in as you are breaking structure. And that's the most important thing, is to wait until you break structure to have a higher low, because until that structure is broke, your trading range is actually from here to here, not here to here. And so that's a simple uptrend. We can do this a lot faster on the downtrend. I'll show you a downtrend really quick. So if we got a low, lower high to a lower low, lower high to a lower low. And as we know, this is our low. This is our lower low. We have a break of structure. So now we're pinning in a lower high to a lower low. We have a break of structure, and now we're putting in a lower high. So as you can see, very fast. Here's our break of structure right here. And we have a break of structure right here. So simple downtrend. We're putting in our values very fast. So we have a low, a lower low, a lower high, lower high, and a lower low. And the same as an uptrend, we are now in a downtrend, and as you can see, we're making lower highs, and we can draw a trend line to trade off of, and that's a simple downtrend. And so same thing applies. You do not want to draw these lower highs until you have a break of structure, and once you have a break of structure, that signifies your lower high, and this is what we'll call a strong lower high. These are strong, right? And these are weak. And as long as these stay strong, we're in a downtrend, putting in lower highs, lower lows. Now, it doesn't have to work out as perfect on the trend line. We can have this situation here to where we come here, double top right here, go down, and that's still a downtrend, right? This low still held. We're still putting in lower highs, even though it was equal, but it did not break the structure here for a change of character. And so we just stayed in the downtrend, right? Important to note that is still a valid downtrend. Even though, we broke the trend line, we put in a equal lower high, but it's still a lower high and it's still in downtrend until that structure breaks. So that is trend continuation. We've already somewhat talked about a range. We can go over it one more time quickly. So in a ranged market, you'll have a trend, and then we'll put in a low, and we can do something like this. So if we were to draw this out market structure wise, we have a low right here. We have a high right here. We have a break of structure right here. So that break of structure signifies that we now have a higher low. We have a higher high. And so in a range market, as we can see, this is our higher low. Right here is our higher high. And in this, we are creating microstructures. As you can see here, we had a change of character right here. We had a change of character, but only this one break of structure. And see, this is a change of character happening on a smaller time frame. So if this was, say, a 5-minute chart, on a 1-minute chart, this would be a change of character. But as you can see in this right here, you have a break of structure once, so that gives this a higher low, and this is your trading range. So this is what a ranged market looks like. As you can see, we're not putting in higher highs, we're not putting in higher lows. We are just simply trading within the range of the market. And so that's the important thing with market structure, is being able to identify ranges quick, because the toughest thing I see before going into a range, as you can see, like right here, you got a higher low and you had a higher high, right? So if we were to say we were in this part of the structure, candles coming down for a pullback, our assumption right here in probabilities of trading would be that this is a pullback for trend continuation. And so this would be a valid trade to take on the pullback. You're taking it into what was resistance, now becoming support, Fibonacci probably 50% retracement. And you could play this, but when you failed the high to make the high, you have to know, if you are in this trade, that you could be looking at a range market. And in a range market, you can go below this low, because this technically isn't a structure low yet. And so you could come all the way back down to this higher low before you went back, stayed in the range, and then created a new high, or had a change of character to create a new trend. So this is the hardest thing with a range, is because this is a valid trade. If we didn't have any more information than just this right here, this would be a valid trade for a pullback, trend continuation. We just had a break of structure. We're going to assume the probabilities is that we will continue the trend. But the moment you fail this high, your brain has to switch to, okay, now we're in a range market, until structure tells you otherwise. So I say that, that I always preach, scalping some of your position off at structure high for the break. If you don't get the break, you can cut at break even, or you can cut coming down, just assuming that this would be going into a range market. However you trade, that's up to you. And we talk a lot about in the compound trading group on different strategies and how to handle that. But this is your trend market. So now what I wanted to go over is change of character. So a change of character, usually you have a trend continuation with break of structures. So say we have a high, we have a higher low and a higher high, right? We put in a low, put in a higher high. So in a market like this, if we draw up market structure, we have a low, we have a high, we have a break of structure right here. So if we call this break of structure, we have a high, we have another break of structure right here. We have a higher low. We go in, we put in a higher high. And then as you can see, we come down and we break the higher low. So if this was our higher low right here, The moment we break that higher low, this is what we call a change of character. So change of character signifies a pullback, and your trend had a change of character. So now we are changing trends. And then what you want to do with the change of character is a few things. Depending on what chart you are, it's a pullback. And then what you want to look for is, does this change of character have a break of structure? So as you can see, here's a break of structure. And now you have a lower high. So what we see here now is change of character to a trend continuation to the downside, trend reversal, right? Break of structures with change of characters, it does not mean that your trend is fully changing. So what you can see is have a change of character and then not a break of structure. So you can get this right here. So this is also a valid structure, right? You have a change of character pullback. This structure isn't made because you never had a break of structure. Double bottom, and then you continue the trend. And this is accumulation pullback, right? So just because you have a change of character, you're not safe to assume that you're going to have a break of structure in trend continuation. The way I like to look at change of characters, it's just me personally. It's not a rule set, but it's the way I look at change of characters. Is a change of character is a pullback on a higher time frame. So if this is a 1 minute chart and you have a 1 minute change of character, usually, not always, but usually it means that the 5 minute chart is pulling back. So if you had a 9 EMAs down here on the 5 minute and you went through your EMAs on the 1 minute, this change of character is a larger time frame pullback. So if it's a 5 minute chart with a change of character, you can look at your 30-minute chart pulling back. Now, when you have a break of structure with the change of character, so say you did this right here, and now we have some new structure, right? Because we had that break of structure after the change of character. So this is your low, here's your break of structure right here. So there's your break of structure. And then, you had a break of structure right here too. And right here. So if this was the 1 minute chart and a change of character and a break of structure, what usually I see, once again, this is just how I view it, how I look at it, from back testing this a lot with a lot of charts, what I usually see is when you have a change of character with a break of structure, you usually get a change of character on the higher time frame. So if the 1 minute chart did a change of character with the break of structure, the 5 minute chart is probably pulling back and having a change of character in itself. Not always the case. You always want to use multiple higher time frame analysis to view it, but it's what I've seen a lot in charts. So what I like to do is when I do see a break of structure on a 1 minute chart and say I'm trading a 30-minute trend, I will look at the 5 minute chart and see if we get that same follow through on the 5 minute. If we get that same follow through on the 5 minute chart, that means, okay, once the 5 minute has a break of structure, you can look at your 30-minute chart having a change of character also. So you can ride the trend a little bit longer. But you get your full wave structure there. So that's just how I look at change of character. That's how I look at break of structure. That's how I use change of character and break of structure. But just because you do have a change of character does not mean you are reversing trends. It just means that, it's a pullback. It is a pause, accumulation time, and before you either have a break of structure or have a change of character back up to the upside to continue your trend. Another thing you can have with a change of character is into a range market. And that's important to notify also. So now let's take this information and let's move to the charts. All right, so what we're going to look at is SPY today, July 12th. I believe it is Tuesday. Today was a painful day. I'm choosing this day on purpose because it was a range day. It was a hard day to trade. But it is what it is. And so as we know coming in today, that I've shown this in Compound Trading Group Discord a lot, our 30-minute chart is in a large range, which means the 5-minute chart is going to be kind of choppy. We'll see a lot of chop price action. And also EMAs can be choppy, and so you have to trade accordingly. For me, when a 30-minute chart is in a range, I use a 5-minute structure, and I trade on the 1-minute chart. I usually like to use a 30-minute chart trend and trade on a 5-minute structure. But now I'm having to use a 5-minute trend and trade on a 1-minute structure. I know that's very confusing to say. Hopefully you can follow that, but that's just how I like to trade. So coming in today, we knew the 30-minute chart was in a range. And so if we turn that range on, here we go. So here is your 30-minute range. We'll go to a 30-minute chart so you can see. We had a low here. We had a high put in. The break of the change of structure made this the low, and so we have a low and a high. This orange line right here is my fair market value. If you were in the Compound Trading Group, you know what I mean by that. If you're not, come join us in the Compound Trading Group and you can learn what it is. But for right now, let's turn that back off. So we know we are in a large 30-minute range. Until this high up here is broke or this low down here is broke, we will trade accordingly to that range. And so let's look at today on a 5-minute chart. We opened up. We were in a 5-minute uptrend coming in with pre-market. And so we made a high. I like to use morning open as my structure low. We broke that low and we put in a lower low. So we had a change of character right here. We made a low and now we have a high. So right off the bat this morning, our 5-minute chart had a change of character and went into a ranged market. This was very important to realize very quickly, because if not, you had a lot of change of characters on the 5-minute chart. So right here, you would have had a change of character up. If you pre-marked this high right here, so say this was a pullback to a low, you would have had a change of character right here to an uptrend. Now, I'm not saying that trade would work, because you would have made pretty good money if you bought this, but our 5-minute chart is in a ranged market, and that was very important to know very quickly. Due to the fact that once you're in range, you know to expect chop. A lot of sideways candles, no true slow price movement, right? Nothing moved very fast. So when the 5-minute chart did go into this range, I like to switch down to a lower time frame and scalp accordingly on the lower time frame chart. So here's our 5-minute low we just put in. And so as we know, if we're looking at a 1-minute chart, we can now trade on the 1 minute and kind of trade almost a 30-second structure, but it is what we have to do when we're in a lower time frame range market. So as you can see, the 1 minute, if we just draw out our 1 minute structure, we had a high right here. Here is your break of structure. We had a break of structure right here. So now that gives us a higher low. We had a high put in right here. So there's our high. And so now our trading range is from this higher low to this high. So as you can see, we traded down into that range for 9:39 all the way down to 10 o'clock. So almost 30 minutes we stayed in a 1 minute range. We are in an uptrend right here. So we did not know that we were going to have a change of character all the way until 30 minutes later. So we worked our way all the way back down. We finally get a change of character right here. So here's your change of character to the downside. We make a low. All right, so you see we had a change of character. Now we have a low. Now we have a break of structure right here. So we had a change of character to the downside. And then we stayed in a range and then had a change of character back up to the upside. So if you were trading this right here, you have your accumulation to an impulsive move, right? So here's our change of character. So now what we want to see is a pullback to a break of structure to give us a trend, correct? So if we keep going along, let's draw this high right here. I didn't have that drawn, sorry. So there you go. You had a break of that high. There's your break of structure. I know it's very small. There's some traders that don't include wicks. They want a candle above, but you technically had a break of structure right here. So now, as we know, we made a new low, right? That break of structure made a new low, and then we had another break of structure. So if we drew off this top right here, you had another break of structure to make a new low. So now we're trading up. So if we mark our high, we had a break of structure right here. That break of structure made a new low, a higher low, that is. So we're continuing to put in higher highs, higher lows, okay? So if we come back to here, as you can see, we were in an uptrend. We put in a large range. We broke, change of character to the downside. We put in a low. We had a change of character back up to the upside right here. We came down. We had a break of structure which set this low. And then we had a break of structure right here. Sorry, I didn't mark this one for you guys. I want to make this as clear as possible though. So we had another break of structure right here that set this higher low. We had a high break of structure, set this higher low. So as you can see, we clearly went from a downtrend, accumulation, change of character to a change of character to a trend reversal with the break of structures. And now we are in a clear uptrend on the 1 minute chart. So now what do we get? We get a change of character to the downside. Let's see how this one plays out. So now what we can do is we can draw our low on that change of character. So as you see right here, we had a break of structure. Now, this is back to the art of market structure, right? A lot of people do it different. Some people want to see a candle body. Some people do wicks because this could just be a liquidity sweep. It is up to you how you want to do it. But with that break, here's your change of character, and your low is up here. So you had another sweep, see, right here. So now you have a flip again. And as you can see, we just continue on with our market structure. So now what I wanted to do here is just give you a simple breakthrough. Let's just walk through this. As we know, we had a low, we set a high, we had a break of structure to give us a higher low. This higher low did not become a higher low until this break of structure happened. When that break of structure happened, we got a higher low and a higher high. Then we had a move down. These are not structure moves down because this high or this low hasn't been broken. So up till this point in the market, right here, we are in a range, right? Here's our range from right here to up here. And so we're just in a range. We're still technically in an uptrend, but we are in a ranged market until one of those structure decides to break. And what do we get? We get a change of character to the downside. And then we get a flip, change of character back up to the upside. we get a pullback, and then we get a break of structure, which means now this change of character has a break of structure. So if we look at this on a 5-minute chart, we have a low, we have a high, we had a break of structure to the downside, which made this the high, this the low. We're in a range, correct? So now on a 5-minute chart, we're in a range, but I'd like to show you just what is happening with these change of characters on a 5-minute chart. So as you can see, the 5-minute up, we pulled back on a 5-minute chart. This was a 5-minute pullback. And then this change of character was a small pullback again. And with the break of structure now, as we keep going on, you'll see the 5-minute chart work its way back up. So I just wanted to kind of show you today, it's not as clear when a 5-minute chart's in a range to be able to see how change of character and break of structures play with each other. What I would like you to do is find a chart where 5 minutes in a clear trend, go to the 1-minute chart, find break of structures, find change of characters, and then move back to the 5-minute chart and just see how the two charts work together in tandem. Because what we do know with market structure, and this is my last point I want to make today, is what we do know is within a trend, so we have this trend. And let's just say this is a 30-minute chart. So our 30-minute chart is making a high, break of structure, high or low. We have a high, break of structure, high or low. And we're putting in a high. So if this is the 30-minute chart, what we do know within this 30-minute chart is the 5-minute chart is going to have multiple moves within that 30-minute chart. So what you will see is this leg here will be a full structure move on a 5-minute chart. So your 5 minutes is going to look like that. And then you're going to have a pullback. So your chart could look somewhat like this, right? Now it's never as beautiful. But as you can see, your 5-minute chart trying to move this whole thing, sorry. Your 5-minute chart could look something like this. So as you can see on a 5-minute chart, you have a high, you have a break of structure, makes a higher low. You have a higher high, break of structure to a higher low. You have a higher high. You have a change of character that happens right there with a break of structure. Makes this a lower high. You have a change of character up with the break of structure, makes this a higher low. You have a higher high with the break of structure, makes this a higher low. You have a change of character right here. I love that I drew it so funny because this is how market structure works, right? Not everything is always just so pretty in market structure. Then you have a change of character with the break of structure to make this a higher low. And as you can see, you have a higher high, break of structure, higher low. And so if this is your perfect 30-minute chart, your 5-minute chart is making trends within that trend. So this pullback is a full structure move down on a 5-minute chart. So if you're trading a 30-minute trend, it's very important to know what part of your trend you're in, because if you look at a 1 minute or 5 minute chart, you could be in a downtrend when your 30-minute chart is still in an uptrend. So you'll have multiple trends on a 5 minute chart, right? So if like here's our uptrend, that trend's broke, here's our downtrend, that trend's broke, here's our uptrend, that trend broke, here's our downtrend, and then uptrend, where your 30-minute chart is just a simple uptrend. So that's how I like to trade. I like to trade these structures. So I like to buy a 30-minute pullback, which is the bottom of a downtrend in a 5-minute chart. And how you would do that, this is the last point I'm going to make, and I'm going to call it a night. But the last point I want to make is how you do that is you see you have a high, and then you're working down low. Well, what you're looking for is this change of character to happen on the 5-minute chart to get a low. And then, you want to buy within the pullback of this change of character, because as soon as this pullback happens, a lot of times it's a double bottom. It can be right here. You see how we make a double bottom and then change of character. Or this pullback could be deeper for a double bottom. It happens a lot of ways, but you watch price action, you watch 1 minute chart change of character. The 1 minute flips before the 5. When the 1 minute flips, you can look for the break of structure and know that the 5 minutes flipping. And what that is signifying is this 30-minute pullback. So if you're looking at a 30-minute chart and you're pulling back, you want to watch the 5-minute chart flip. You want to watch the 1 minute chart flip, because within this 5 minute, as we know, just like this 5-minute chart, the 1 minute chart is making full structures. So that's a full structure move up, a full structure move down, change of character, back up. And when the 1 minute flips and you get the break of structure, then the 5 minute could flip. So that could be the bottom of the 5 minute there to a change of character back up, which could signify this 30-minute low. And that's how I love to trade. But when I showed you with SPY today, as in everything's in a range, you kind of have to adjust how you trade. And so I like to use the 5-minute structure with 1 minute chart and keep everything a lot shorter. Whereas if I was trading the 30-minute structure, I would like to take a trade here, take some off at structure high, you maybe get a pullback and ride it up to this structure, right? And I can have targets. And like even with this right here, if we were to pull a Fibonacci retracement, so you get a pullback kind of within the golden zone, right? And we could trade to the 1272. The 1 is obviously our first target. We could trade to the 1272. There could be supply and demand on a further out chart. There could be key levels. But with Fibonacci's, you have targets mixed in with key levels and supply and demand and fair market gaps. There's a lot of confluences that you can start adding together to make a trade. I hope this video helped. If you do have any questions, come join us at the Compound Trading Group. It is a free Discord. We teach a lot. We have great traders in there. We have great leaders and some great traders that are just like you, that join the Discord, have learned and can add a lot of value to your trade. We don't do call outs. We are strictly an education-based Discord that likes to teach, likes to have fun, create a family. So come and join us. I hope you enjoy this video.